QuickBooks Online 2026, analyzing the form and impact on the financial statements of the pay bill form, the form that follows the bill form in the sequence of events for the accounts payable or AP cycle. So get ready and some coffee because the accounting team is on board with QuickBooks Online 2026. Here we are online in our browser, searching for the free QuickBooks Online sample company file, simply typing into our favorite browser, QuickBooks Online Test Drive, searching for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks, selecting the United States version of the software. We're going to verify that we're not a robot. Tell them you're not a robot, Ara.
Not a robot. I'm Ara, your AI sidekick. Let's punch in QuickBooks Online Test Drive, Intuit.com result, US version.
And boom. See, they let us in here. They let us in. That's further evidence that the AI Ara is sentient at this point in time, not just a robot. Even Intuit recognizes it, just lets her in, no problem. Not a robot. Not a robot. Let's go to the reports on the left-hand side. We're going to be opening up the two major financial statement reports, which are under the favorites. Right-click in the balance sheet to open a link in a new tab, as we do every time. Right-click the profit and loss to open a link in a new tab. Let's go to the tab to the right. As it is thinking, we're going to be changing the date ranging. I'm going to type it in there because I want to practice typing in the date range. I'm going to close this stuff up in as succinct a format as we can, going from 010125, no dots, no dashes needed, just the numbers, and then 123125 in digits, 222 digits, and then just hit the tab button. That's how to do it nice and quick to get your range. Let's go to the P&L, profit and loss, otherwise known as the income statement. Same range, same thing, 010125 tab, 123125 tab. There we have it. Let's go to the first tab. That's going to be our startup process, as we've seen and will do every time. Okay, so now we're going to go into the plus button. We are once again looking at the vendor cycle in essence. If you have a very simple system, as we said in prior presentations, then you might be able to do the cycle by basically just paying stuff as it becomes due with the setup of the bank feeds, which we'll have a whole nother course or section on. But if you have an accrual component, you're going to have to deal with bills. That's the form that increases the accounts payable, which then leads to the form which will also be necessary in that event of the pay bills form. To understand that, let's go on over to our flowchart. This is a desktop homepage screenshot, but we're using it just to look at the flow of the forms. We're looking at the AP cycle or accounts payable cycle or the expenses cycle, the purchases cycle, whatever you want to call it, which would have the vendor center as kind of like the classic language to it. Now up top we have the arrows that will show us if inventory is involved, and then down below we just got the normal thing if it's just an expense which you're paying for but putting it through accounts payable. Quick reminder on the forms. When you have a bill, that could mean that we're billing the client. You might hear that all the time. We're billing the client. But when I enter it into QuickBooks, we don't say we're billing the client. We say we're going to enter the invoice form into the system. And then when we have work, goods, or services done for us, then they bill us. We think of those as actual bills, right? They billed us the information, which we might get electronically at this point in time, and we might pay that bill with an expense form, which is a type of check form, meaning I don't enter the bill into our system as a bill form. But if I want to use the bill form, that means specifically I'm not paying it yet. It means I'm doing an accrual thing. It means I'm increasing the accounts payable. So I get the bill, which might say invoice on it because it's coming from another company to them from their QuickBooks. It would be an invoice. We're going to still call it a bill. We could pay the bill, or we can put the bill into the system as a bill. If we used as a bill, it's a bill form, data input form, which by definition in QuickBooks means accounts payable is going to go up. So that's what we looked at last time. If we have bills in there, we have the accrual account of accounts payable, and we're going to have to then pay the bill at some point in time, which gives us the pay bill form. You might say, well, isn't that just a check that we're going to pay them with? Isn't it just an electronic transfer out of our checking account? It is. That's true. So another terminology thing here, meaning every form that decreases the checking account, you can think of as a type of check form. But more likely in QuickBooks, they like to break out different names for different types of checks. So if you're paying electronically and it's just a generic form that you're paying for an expense, they call it an expense form, even if you're paying for an asset like property, plant, and equipment. And if you're paying down accounts payable, they're going to call it some kind of pay bill form. Still just basically an expense form, a check type form. It's decreasing the checking account. A check form by definition is decreasing the checking account, but the pay bill form by definition is decreasing both the checking account and the accounts payable, reducing the accounts payable. There's a little bit of a tweak there. You could use an expense form or a pay bill form to record to a credit card, which would increase a liability. But the general idea here is usually we're paying it off with the checking account. Now that will lead to the question of, can't I just basically use the bank feeds to pay the money out of the checking account? It's possible, right? It's possible that you enter the bill into the system and then you just pay the bill once it becomes due, and then you try to connect the bill payment that you made to the bill form with the bank feeds. Possible, but not likely the way you're going to do it, because if you're tracking the accounts payable, you're most likely going to track the accounts payable that's outstanding and then make the payment as you record it into QuickBooks, trying to delay the payment as late as possible because of time value of money, and then you'll just make the payment at that point in time. How do the bank feeds fit in then? Well, the bank feeds will also record the transaction, which will pull into your system in what I call bank feed limbo. So if we wrote the check ourselves, in other words, let's go back on over here, then it's going to go into apps and we're going to go into accounting. It's going to flow into the bank feeds, into what I call bank feed limbo. That's going to be here. It hasn't impacted the financial statements. If we were building our books from this information, then we would just record it as an expense. If we're matching the thing to the bill, not having recorded the bill, then we're going to record it as a transaction that matches to the bill. But if we already recorded the bill payment, then we're going to match it to the payment that has already been made, and it's just going to be something that helps us with our bank reconciliation. All right. So if that said, let's go back on over here and let's imagine that we enter a bill and then we'll pay the bill. Let's actually enter a couple bills here. So I'll go into the bill form. I'm going to close up this thing. We saw that last time. We've already seen a bill form. I'm just going to do it again because we refreshed it so that we could see the increase and decrease to accounts payable. Let's say this is just going to be Vend 1. I'm just going to call it Vend 1. I'm going to add it as we go so we could set it up. All I need is this basic information to be including Vend 1. I'm tabbing through the form. Terms I'm not really worried about because I'm going to have to put the bill date in there manually. So I'll say there it is. I'm going to say the end date. Let's say we're going to keep it in January. Let's say it's going to be 01/15/25 to 02/15/25. That second date is what we're going to sort by. Let's say that it's going to be a category type of bill, and let's say it's just going to be a new category, expense 1. I'm going to add an expense account just so I know exactly where it is. The type of account will be an expense, and the sub account will be, just say, other office, let's say. Let's save it. Let's close it. And let's give it $250 as the amount. What's this going to do? Well, it's a bill form. Bill form means it's going to increase accounts payable, not go into the checking account. No cash impacted yet. The accounts payable liability is going to go up, and the other side is going to go directly to the expense that we have assigned it to for the dollar amount of $250. I could make it assigned to an invoice, by assigning it to a customer if I had a job cost system, but we saw that last time. That's not where our focus is this time. Let's save it and close it and just double check that it does do what we think it should do by going to the balance sheet form. Let's go ahead and refresh it up top. Then I'm going to close the triangle and scroll on down to the A to the P, the accounts payable, the app account, even though it's not really, doesn't have like an app related to it. So there it is. There's the bill form. Vendor 1. Expense is the other account impacted. So let's go back on top. Let's go to the P to the L, the profit, the loss, the income statement. Make sure it is fresh. We only work with fresh reports and fresh vegetables and produce because that's how we roll. There's the 250 right there. So we saw that in essence last time. Let's go to the first tab again and open up our reports just to see what we would call the Subledger. Scrolling down to this section, what you owe, I'm going to open the vendor balance summary. Right click, open a new tab. Right click, open the vendor balance detail as well. And go on over to those two tabs. It's going to be thinking a bit. So we'll let it think. And so there's going to be the total amount here. And there's going to be the vendors that are impacted. Okay, I had to refresh it again to see the 250, and that brings the balance up to 1,852. There's our new vendor. That matches what's over here. Okay, so typically bookkeepers aren't going to use that as much. They're going to go over here and pay the bill by going down to the app section, and we're going to be in what used to be called like the vendor center. Now it's called expenses and bills area. So I can select that. It gives me my side screen over here. But if I go out of that, I have my hand boogie up top. If I'm scrolled up, I'm in the expense transactions. I could search here, most likely not the first place we would go, but we could, and say that, look, I want to look for the bills, and then I want to filter, or we could filter it, but I could just scroll down and say, then there's the bill. I could schedule a payment here. Or mark as paid. Again, most likely not the first place we would go because we could go back in here. Let's go to the hand boogie, open the hand boogie. We could go into the vendors. Now, if it's a particular bill, this is more likely where you would go if you're discussing the bill with a vendor, like you're on the phone and you're talking to them about some problem. I can then go to open bills to sort it a little bit more easily. Although I already know what the vendor's name is, right? And it's going to be vendor 1, going into that one. And I see that I have my bill here, which again, I could schedule the payment and so on and so forth. So the other way I can do it, however, most likely where I would go, let's go into the hand boogie. Let's go back to the vendors. Notice the back button is inside of QuickBooks, not up here. Back to vendors. You could use this one up top, but it's not really the most efficient way. QuickBooks is all kind of in one area. So then I can open the hand boogie and then I can go to the bills. That's most likely where we would want to go. So within the bills, let's go back up top, close the hand boogie. And so there's the bill. Now, if there are multiple bills, I can check off the multiple bills and schedule the payment. Or I could just simply go up to pay bills up top, which is another type of form, which you can also get to by going to the plus tab and going to pay bills. So this pay bills form will take me to another screen, which is like a data input form, meaning forms mean they're going to have a financial transaction, meaning there's going to be at least 2 in financial statement accounts that will be impacted whenever you enter a form. The thing that's different about this data screen, however, is that it's going to create multiple forms if you check off multiple items. Why? Because you're basically saying, look, I have all these accounts payable. I'm going to track it by the status, how overdue these items are, and then I'm going to basically make payments on them, right? And so I might have multiple items that I'm going to be paying. That means that I'm paying them with a type of check form. It might be an electronic transfer, but that means it's going to be like an expense form, which is going to have the name of a pay bill form, but there's going to be two of them that are created. In other words, when I drill back on the data, it's not going to show me this screen with all this information. It's only going to show me each check that I'm doing. It's just that multiple checks can be processed, or multiple transactions can be processed at the same time. So for us, I'm just going to check this one off, and I'll show you what I mean. And let's do this as of 01/20/25. Let's say it won't let me do it that way. So let's say it's going to be 01/2/20/25. Let's do that. January 2. Let's just do it January. I have to go past that date, don't I? That would be after I wrote the thing. All right, let's do it there. Okay, so then I could schedule a payment. I could save it, save and close. So if I save and close it, what's it going to do? The pay bill form actually has both sides of the transactions as things that always happen with a pay bill form, and for the most part. Meaning, what one side of the transaction is going to be, it's going to decrease the accounts payable. That's the definition. The other side's always going to go to a type of financial account, which I have to select up here. Typically, it's the checking account. So normally, meaning you're writing, in essence, checks or electronic transfers out of the checking account. Now, it could be a credit card account. So to be specific, meaning the pay bill form is like a check form, but you can be more broad and say it's going to be like a financial type of transaction form, meaning it's going to have an impact on a financial account that could be connected to bank feeds. Typically, that's going to be either a checking account or a credit card type of account, typically checking. So let's hit off the checking, and once again, let's save it and close it, and then we will check it out. So let's go on over to the balance sheet and scroll up. And we're going to hit the caret so I can refresh with the little refresh rewind button. And then we're scrolling down to the A to the P, the accounts payable. We'll go into that one and see que paso. And we can see we have a bill form and then the pay bill form. That's what you expect to see in accounts payable. That's it. The only account that's really complicated in the detail is the checking account, because it has a whole bunch of things. The checking account is the lifeblood of the company. All other accounts are pretty straightforward in the general ledger type of account, which is the transaction detail report. Let's go back on up. Where did the other side go? Que paso to the other side. Went into the checking account. Checking account went down because we paid it out of the checking account. So there we have it. Now it assigned a number here because we basically put a number. If it was a check number, we'd have a check number. Otherwise, we'd want to, on the reference number, put it as a transfer, so that it doesn't mess up our checking account. So let's go ahead and close that back out. And so that's going to be the idea. So that's the other side. Now, what about the profit and loss? No impact on the profit and loss, even though cash went out? Yes. Why? Because it's an accrual component. The accounts payable account is an accrual account. We recorded the expense at the point in time we incurred it, which is closest to the point in time when we enter the bill, not the point in time that we pay the bill. So even though we didn't pay the bill when we entered the bill, we record the expense at that time because we incurred the expense at that time. And then we pay the bill at a future point in time, and we don't record it to the income statement, but have two balance sheet accounts impacted, decreasing the checking account other side into the A to the P account, accounts payable. Now the vendor balance detail over here, this, once I refresh it, this one will go away, right? So I'm going to refresh, and that one went away. Boom, no longer there. So we'd have, once again, 1,602.67 tying out to the balance sheet total, which is also 1,602.67. All right, let's go back to the first tab. And now in this section, in the unpaid area, that amount has moved because we paid it at this point in time. So we have to move. If we go over to the paid side of things, then we should see that that we have that payment that was made. Here it is, vendor on 2/15. We made the payment. I thought it was 1/15. We made the payment. It was due on 2/15. That was the bill date. This was the due date of the bill, and it doesn't give us the actual payment date, which is unusual. But I could go into it, and it gives us that information here. And it says paid. Now, this is kind of nice too because it gives us the bill, it gives us the paid item. If I click on that, I get the link here's another link. That's going to link us to the bill payment. By the way, this reference number right here is the one that we could adjust and remove the reference number if it's an electronic payment, or type in, electronic or something like that on the pay bill. Let's save it and close it there. Save transaction, yes. By the way, on the balance sheet, if you drill down on the data and we go into the checking account and we drill down on the form, that was the bill and then the pay bill right there. So let's go into that, decreasing the checking account. That takes us to the form. Notice the bottom of the form doesn't have all that information because it only has the one that we checked off here. So when we go into the pay bill form to actually pay it, it's going to have a sorting screen that will allow us to pay the bills and see which bills we want to pay. When we go back into it as a drill down form, it's typically only going to have one of the bills that we paid with the pay bill form. All right, let's close this back out. Now, the other thing to just note here is because this other side of the transaction went to accounts payable, you don't know which expense account was paid. You might know by the vendor on the form, but so it might say telephone company, and so you would know it, but it wouldn't say. It might say like Verizon or AT&T, but it wouldn't tell you the actual account. So to find the actual account, you have to go into here and then look at the bill form, which is connected. The bill form is here. If I go into the bill form, it's going to have the information for the actual account. So now we have the expense account. This would be the category, which would be telephone expense if it was a telephone bill. Let's close this back out. And then I'm going to go back to our report up top, back to the summary report, back to the first tab, to the bills. And then if I go into the apps section and expenses again, I should have just hit the thing up top, the ham boogie, and I go into the vendors. Now we can check out in the vendors, scrolling back up, closing the ham boogie. Notice that the open bills no longer is showing us that vendor because it still has, I closed the open bills. If I go into the open bills, then it's not going to have that vendor in it anymore because the bill has now been paid. If I clear that open bills and I look, or I could go into paid in the last 30 days if I want to. Say I just paid that one. I can check this one, might sort it out a little bit more succinctly. And then I go into the vendor. So I don't see it here. That's weird. Let's go ahead and clear. I'm just going to clear the filters. Clear the filters and just search for vendor. Boom. Now I can see the detail. So if I actually contacted the vendor and they're like, hey, did we get the payment? So notice here I can say the bill, here's the bill, we entered the bill, and then I can say we sent out the payment. If it was an electronic transfer, I can easily then go to the bank and see if it cleared the bank, which could be pulled through the bank feeds to see if it cleared the bank feeds. However, if it was a check, then there's going to be a timing difference. So that's the benefit of having electronic transfers. It should clear basically automatically, and we'll be able to see it. If it's a check, we then want to go into and see if it cleared. Now notice again, I could have waited until, I could have paid this electronically, waited till it cleared the bank feed, and then try to tie the bank feed to the bill. But I'm not sure you would functionally want to do that if you're tracking the accounts payable, because you might as well make the payment as you're recording the accounts payable, using the bank feeds then as a way to reconcile the accounts rather than as a way to actually enter the transaction. But either way, this should indicate whether or not it cleared the bank account. And so once again, now that something hit the bank account, it would be under the bank feeds if we were connected to the bank feeds, all right? So then I would see it pass through the bank feeds. Because I already recorded it as a type of check, an expense form, a decrease to the checking account, then over here, it would just be a matching type of transaction, and it wouldn't record anything new. It would take it out of bank feed limbo, and it would help us to reconcile, which is basically taking the bank's books, tying them to our books to make sure nothing got double recorded or didn't get recorded, which flowed through the bank. Does that make sense, Ara?
Yeah, total sense. You paid it right, so checking went down, AP came down, no extra noise on the P&L because we already took the hit. That's accrual in action. Expense when you get nailed, not when you fork over the cash. And the drill down? Beautiful. One click gets you to the bill, one more to the payment, one more to the bank detail. If they ask why bother with pay bills versus just expense, boom, you just showed them. You get a running tab, you pick what to knock out, and it all lines up clean. No mystery money hiding in limbo. Bank feeds just nod along when it clears. Want to throw 2 more vendors in and pay them together so they see the batch thing, or call
Okay,
it?
so that'll basically, let's keep it at that. We'll get into the bank feeds more in a future presentation, but that's basically the pay bills kind of idea. Again, if you have bills, and then you're going to be dealing with the pay bills form, and those will force you to be, that means you're doing an accrual type of thing if you're doing that. Just a quick note that, again, you could enter the pay bills with a credit card, and again, the credit card could be connected to the bank feeds as well. People get a little confused on the credit cards, but sometimes they're actually easier. I'm not recommending running your business on a credit card because you could, but you want to make sure you pay the credit card because you're going to end up with obviously interest and whatnot if you don't. But from a transaction standpoint, the credit card's pretty straightforward, except that instead of when you record charges, it decreasing the checking account, it's increasing the liability account, right? So as long as you keep that in mind, the credit card's pretty straightforward on the bank feeds, as we will see in the course or section on just simply bank feeds, because you don't have to deal with all the other stuff. Really, there's only charges, and then you pay off the credit card. Whereas in the actual checking account, you have the charges that could be expense accounts. You could have payroll going through there. You might have different types of checks that you're making, like a bill payment check versus an electronic transfer versus a paper check versus the check that you write for your taxes, which might be, again, payroll taxes or other taxes, or your sales taxes, which they use a different check form. So the checking account, let me just show you, gets messy. If I go into the checking account here, because it's the lifeblood of the company, the transaction detail report has all of this different forms that are going through it. And all these forms are hitting the checking account, either increasing or decreasing the checking account, which you can think of as basically either they should just have basically, or the most simple format would be you either call it a deposit or you call it a check form. It's either an increase or a decrease, just like on your bank statement. You could also call it a transfer if you wanted to add one more form, if it's transferring between like the checking to the savings or vice versa. But what QuickBooks does is it names particularly all the expenses with different names, right? And even some of the deposits could have different names for increases and decreases to the checking account, which results in a transaction detail report that gives you a lot of information by just looking at the transaction type, but also makes a lot more complexity for sorting the information by simply increases and decreases, which you would think you could do by just giving the transaction type of either a deposit or a check type form, okay?
Checking account's a circus. Every form shows up like it's proud to be there. Makes sorting a pain, sure. But here's the trick nobody likes to say. Just filter by transaction type or payee. Boom, All your pay bills clump together, all your actual checks clump. Even if QuickBooks won't let you rename them simple check or simple expense, you still get a clean list. Credit cards? Way calmer. Just charges in, pay it off out. Like a polite roommate. Checking's got 6 roommates and 3 dogs. We'll clean it up with bank feeds later, promise. For now, just tell them, yeah, it looks messy, but it's all one river. Filter the water.